Good morning, this is Tim McGowan for the Finance News Network. Stocks slipped Thursday as big bank earnings kicked off with disappointing results and traders assessed the possibility of even tighter US monetary policy from the Fed Reserve as recessionary fears lingered. The Dow Jones Industrial Average shed 0.46%, while the S&P 500 slipped 0.3% and the Nasdaq finished flat for the day. Stocks closed in negative territory but well off their lows. At one point, the Dow plummeted as much as 628 points, while the Nasdaq and S&P 500 fell more than 2% each. Equities were on track to close out the week in negative territory. One strategist said, if the banks are a barometer of the whole economy, as well as what we're likely to get from other earnings reports going forward, it's going to be an ugly quarter. It appears that the talk of a US recession has only this month been on consumers' mind, going by Google searches during July. For many young investors, a recession is not an environment they have been used to. Earnings results from the major banks on Thursday offered further clues into the health of the US economy. JP Chase reported earnings this morning that were lower than forecasts as it set aside bigger reserves to cover bad loans, a possible ominous sign for the rest of the banking sector. Continuing the trend, Morgan Stanley shares slipped about 0.4% on the back of a sharp decline in investment banking revenue, while Goldman Sachs, which is set to report earnings Monday, fell nearly 3%. Earnings from big banks will continue on Friday with results from Wells Fargo and Citigroup. The results from bank stocks raise further concerns that earnings estimates have perhaps risen too much in recent months. It now appears the market is finally concerned about the fact that earnings estimates, having gone up almost non-stop during the first half of the year, will now have to come down. Across the sectors last night, energy, materials and financials were amongst the S&P 500's worst performing sectors. Big tech stocks were mixed on Thursday, with information technology up nearly 1%. Shares of Apple added 2%. Qualcomm and Applied Materials were higher. In electric battery news, Ford Motors and Korea's SK Innovation sealed the deal on the creation of a joint venture that will bring more battery capacity to the US and feed the Detroit car company's ambition as a maker of electric cars. Ford will spend roughly $6.6 billion over the coming 5 years. Battery production should start around 2025, helping Ford meet its goal of selling 2 million electric vehicle cars a year by 2026. In crypto news, crypto lender Celsius has filed for bankruptcy. The move comes a month after it froze withdrawals, raising the prospect that more than 1 million account holders will not be able to get their money back. An outflow of money from crypto investments has shaken the foundations of crypto banks and startups. Overnight, Bitcoin futures were up 5.2%. In commodity pricing, iron ore futures are pointing to a 6.6% fall. Overnight, gold lost 1.7%, silver was flat, copper was off 3.3%, oil fell 0.5%. Across the currencies overnight, one Australian dollar has weakened slightly compared to the US dollar, buying 67.5%, with the US dollar index up 0.6% on broad strength. In Australia today, the very strong June labour force data has made a rate increase certain when the RBA meets on August 2. It is now just a debate about the size of that move. The SPI futures are pointing to a 0.8% loss today, giving back yesterday's gain, with the resource sector expected to be under pressure. This is Tim McGowan with the Finance News Network.